Hello, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My sincere apologies, guys, for the delay. We were having an audio issue, but that is finally settled, and now we can get into the markets. Okay, so today we have quite a number of events. We have the CPI, and of course, we also have the NFP, and today essentially what we are going to do is we are going to go through what we can expect. So we have quite a bit to go through, and we shall have a good approach of how we are going to go over the markets and prepare properly for FOMC. So of the two events, the one that is the most important, I believe, is the FOMC event, which of course we're having FOMC at the red decision to be released at 9 p.m. and then soon after that we are going to have the Fed conference by Jerome Powell. Now at 3:30 today we have the CPI, and let's just look first of all at the CPI calendar to see what is on the agenda for the calendar. Now, what I need to just mention is whatever comes out of the CPI today is not going to be in any way taken into account by the Federal Reserve, simply because keep in mind, guys, that whenever we have FOMC on Wednesdays, we usually have two. It usually is started by two meetings. We usually have these meetings. That's the Federal Open Market Committee. So they have their meetings on Monday and Tuesday, and then they wind all that up with a meeting, rather with a conference, which we're having today, Wednesday evening or Wednesday night for East Africa time. Now, whatever comes out of the CPI today is not going to influence any decision that is going to be taken by the Federal Reserve, because whatever decision they have taken, they have already voted on it as of yesterday. Okay, they voted on it yesterday, and that's what we are going to see in today's rate statement that's going to be released. Now, before we go through the CPI data, I just want to go through the forecasts of what we can expect from what the different banks in the US have forecasted for the CPI. So typically CPI tends to come out around the median target, which of course you're seeing here. So the median target for the CPI is that we're going to get a reading of about 3.4%. A number of the different US banks are indicating or pointing towards a reading of about 3.4%. As you can see here, Goldman Sachs, JP Morgan, BMO, Bank of America, Barclays, Citi, Morgan Stanley, HSBC, UBS, Citadel, and Wells Fargo are all pointing towards a reading of about 3.4%. And this, of course, is the headline number for CPI. Now, when we come to the data here, markets are pointing towards a potential decline for CPI from about 3.6% to about 3.5% on the headline number. Now, if you click on this data here, it's going to reveal to you what we had previously for CPI. And you can see that the previous reading has been indicating that there's some kind of a decline for CPI. Now, I want you guys to just be aware that typically, inflation has been reducing, not only in the US, but also in the different other economies. We've been having a slowdown. We got PCE released, I think, last week, but one. And the PCE data we got also indicated that there's some kind of a slowdown in private consumption by households in the US. So I think it's likely that we get a lower reading for the CPI. Now, seeing that the medium target for the US banks is pointing towards a median of about 3.4%, it's very, very likely that our CPI comes out about 3.4%, possibly also around 3.3%. Now, what does that mean for trading today? Guys, CPI typically has not really been moving markets as much as such. I think it's just last month that we got a relatively, a relatively busy market from the release of the CPI. But since we have later evening, I believe the movements for the are extremely muted. in line at 0.3%, the market is going to just stay choppy, and most likely we will not see any movement from that release of that data. Now, crossing over to headline month over month, headline month over month is pointing towards a potential decline from 0.3% to about 0.1%. So that again is also in line with expectations for the different US banks that are also looking at potential decline to a potential decline to 0.4%. Now, for the headline, again, this number here, we're expecting it to come in line with expectation at 3.4%. If we get a reading of 3.2, 3.3, all that is going to show us signs of a potentially bullish DXY. Now, guys, I just want to also mention this. The longer term target for the Federal Reserve is 2%. Okay? The longer term target for the Federal Reserve is 2%. And that target ideally is a target that they set, expecting it not to be reached immediately, but they keep looking at it to get an idea of how inflation is moving. Okay? So the reason why we've been having a bearish DXY, when you cross over to the DXY, mic check, is my network okay? Is my audio fine? Okay, Linux, currently check the issue I think is on your end. My network is actually fine over here. Awesome. So guys, let's look at the DXY here. So the DXY, typically, this is what it's looking like. We've been having a bearish DXY, and the reason for that bearish DXY has been that decline that we've been having from inflation. If you look at the inflation we had from April, all of it has been pointing towards a decline. From consumer spending to CPI, from consumer spending to CPI to core PCE, all that data has been actually declining, and it's a reason why the DXY has been showing signs of some kind of a bearish trend. Now, I'll just repeat this. From December, the reason why the DXY has also been in a steady uptrend has majorly been on the premise that these guys, or the Federal Reserve, is going to keep rates higher for longer. And that's the reason why we've been seeing that the DXY has been steadily moving higher. Now, I do not expect that much of a reaction from the CPI release, especially if the CPI data comes in line with expectations. I believe that the market response is going to be extremely muted, so we will not get that much of a reaction, and instead traders will push their focus over to the FOMC, which is going to be released later today. Now, crossing over to FOMC, let me just start it off with what I have here. Now, the two things to look out for are what kind of pause we are going to get, okay? Keep in mind that already when I cross over to the Fed Watch 2, we'll be able to see how soon we can expect an interest rate cut from the Federal Reserve. But the kind of pause we get today is going to affect the market, okay? Now, if you look at the projections here, you can see that at 9 p.m., we're expecting an interest rate decision by the Federal Reserve, and it's pointing towards the rates staying on hold, okay? We expect the rates to stay on hold at 5.5%, right? Now, that means that all the market players, traders, economists, and all the like are all expecting the Federal Reserve to keep rates on hold today. Now, the focus is going to now move to what kind of pause we get, okay? If we get a pause where we find a rate statement, which is going to be released at the same time as the rate decision, if we get indications that the Federal Reserve is looking at keeping rates higher for longer, and of course, if they also indicate that if they bring in a narrative that we want to see how inflation proceeds, then all that is going to possibly see us having a bullish DXY. Now, if you look at how the market has typically reacted on the day for FOMC, typically every single time we get a red decision, we've been having the DXY selling, okay? So I'm expecting that soon as we get the rate cut dropping, rather the interest rate decision dropping at 9 p.m., we are going to see an initial sell for the dollar. Okay, we are going to see an initial sell for the dollar, simply because the dollar has been responding to that sentiment that these guys are going to cut rates, or the Federal Reserve is going to delay their rate cuts. Rather, it's going to start cutting rates. Now, how the DXY performs later is majorly going to depend on the conference that we have at 9:30. Okay, so at 9:30 we are going to hear from Jerome Powell, and if we get indications from Jerome Powell that they are still not certain when they are going to cut rates, and also if we also get the interest rate projections, especially for the first year and the second year, you can see this on your economic calendar. If we get the first year interest rate projection dropping from 3.9% possibly to about 3.3% or even lower, that is going to show signs that the Federal Reserve is looking at having more rate cuts than earlier anticipated. Okay, so how do you go approach trading the FOMC at 9 p.m.? So at 9 p.m., I would expect you guys to use stop orders, especially since you're not certain how the market will respond. So using stop orders is the best way to approach the release of the news immediately after it comes out. And then you wait for the conference later. So for how DXY is going to move today, this is how I'm expecting it to move. If we get a hawkish pause and a strike of a hawkish stance from Powell, then I'm expecting DXY to potentially move to the upside and possibly move even as high, break out of this level here and get into this channel here. Okay. Since we got NFP, the NFP number allowed the DXY to have this move to the upside. If you guys remember how DXY moved on Friday, we saw DXY holding this level here quite nicely. We had an imbalance candle and DXY started moving to the upside. Okay, so at the moment now DXY is looking relatively bullish, but it has still not showed signs that it's going to break this level. So if we get higher for longer narrative, hawkish pause, possibly we break this level and move to the upside into this area here. Okay, now if Jerome Powell mentions in his conference today that they are going to look at cutting rates soon enough on the back of slowdown in spending and of course inflation coming down in line to the expectations of their longer term target, DXY could possibly reverse and continue its shorter term downtrend that it has been in from May. Okay, that would mean that DXY most likely is going to move to the downside and it will be aiming for this level here. Okay, that's what I'm expecting for the DXY. Now, I would say if you had to ask regarding the kind of bias I have going into FOMC, I would say it's a tricky one. First of all, of course, if you look at DXY on the daily, guys, we are in a nice rising trend. You can see this from December, okay? And even the NFP number that we got on Friday and intensified that move to the DXY, and we saw it steadily moving higher. Now, let's now move over to the FedWatch tool. So the FedWatch tool is going to give us an idea of what kind of projections you have for the rate cuts. Now, for this meeting of June, today is the 12th of June, you can see that the expectation for a rate cut is almost 0%. Okay, it's almost 0%, and there's a 99.4% chance that we don't get a rate cut today, but instead the target range stays as it is, 5.25 to 5.5. This is the most likely scenario. So when is the Federal Reserve going to cut rates? The soonest the Federal Reserve can cut rates, okay? The soonest that the Federal Reserve can cut rates is going to be in September, guys, okay? In September, we have a 48.3% chance, 48.3% chance of having the first rate cut. And from this September going forward into November, this particular bar keeps increasing, okay? So which means the first rate cut is most likely going to come in September. If the Federal Reserve says that they are likely looking at a rate cut in July, then we are going to expect these projections to change and the target range to increase here, okay? But for now, how the things are looking like is that the first rate cut we get is going to be in September, okay? Yes, awesome. Now, let's look at this, okay? So this is a compilation of the different banks in the US, the size of rate cut that is expected, and when that rate cut is going to come, okay? Now, we have about three asset managers that are indicating that we are going to get our first rate cut in 2025. Now, guys, this is of course unlikely. The Fed is going to have to cut rates, especially since we've been seeing how the US economy is showing signs of slowdown, and they have to reaccelerate that growth by cutting the rates. I mean, look at the GDP we had. GDP came in at 1.6% from 3.4%. In addition to that, we also had PCE coming in lower. All that has pointed towards a weaker US economy. So I think September is going to be the first rate cut, and most likely we get about 25 basis points. 25 basis points what? Cut. Okay, guys, let's cross over to the charts now. Time for the charts. Let's cross over to the charts and see what we can expect, how we can expect the markets to move today. Let's go to the MT5. Okay, so for the charts, we are starting with US 30. For those of you that trade the indices, okay? Keep in mind, this is what you need to know if you're trading on news days. What determines the movement? Yes, fundamentals affect the market a bit, without a doubt. But if there's no impact from the news, the market follows the previous trend, okay? Now, let's have a look at Dow Jones. This is for those who are trading indices. If you know you're trading indices, this is for you, okay? Now, the Dow Jones, let's look at things here, guys. We've been rising very nicely from April, okay? We got into a consolidation box, a Davos box around here, and we started our downtrend swing on the Dow, okay? The Dow's downtrend swing came to a pause around the 31st of May. And at the moment, Dow Jones is stuck in a very, very tight range on the H4 time frame, okay? And for it to move higher today, it's really going to depend on the kind of comments you get from Powell, okay? One of the things that has been stopping a Dow Jones from moving higher is that we are now going into a period where typically demand for stocks typically tends to decrease around this time of the year, and we find money moving into money market assets. So I think that's what's holding us in this downtrend. But also, some of the components within the Dow are also not breaking to the upside. Many of them are in some kind of temporary pause in price action. So how do I go about trading the Dow today? The Dow Jones is going to move in one of two ways, okay? If we see Powell striking a hawkish pause today, we are going to break below this 50% retracement of the FIB on my H4 time frame, around 38,558. If we manage to break below it, then I think we are going to move all the way here to that golden ratio. And it's there that now we shall see how the market will respond. If we get a break below that 61.8% retracement, then I think the Dow Jones is going to move all the way lower and aim for the 100% fib level. Now, guys, I do not see any signs of bearish momentum yet on the Dow Jones. So I think the most likely scenario is in case Powell mentions that the rate cuts are going to happen and inflation is coming down in line with expectations. Even if the rate cut is not happening soon, it's going to be bullish for the Dow. Okay, so let's wait for how it reacts in that box. If we get a break above it, look for a buy. If we get a break below it, look for a sell. Now this is US 30, rather this is Nasdaq. Okay, so for Nasdaq, we are also in a box here, as you guys can clearly see. Okay, the reason why the Nasdaq moved to the upside yesterday was because of Apple's announcement of it getting into AI. Okay, so I do not really think we are going to have a weak Nasdaq today. For us to get a weak Nasdaq today, it's really going to depend on what happens with Apple, especially. Okay, Apple and Nvidia have been supporting a higher Nasdaq. Okay, so soon as we got this announcement from Apple, we saw Nasdaq breaking out of this consolidation. Okay, but before then, guys, we have also been having a strong bullish structure for Nasdaq. Okay, so it's going to take a lot to break this bullish pattern. If we see any weakness in the stocks today, so if you're trading Nasdaq, focus on the stocks. If there's any weakness on the tech stocks, especially Apple and Dow, rather Apple and Nvidia, then I think we are going to get a breakdown back into this range. However, if the stocks are looking bullish, despite of what Powell says, the Nasdaq is going to break to the upside. Okay, and we should see it possibly moving higher. Now let's go to GBP/USD. Now, GBP/USD has been in a strong rising trend, as you guys can clearly see there. We got a very strong NFP reading on Friday last week. I'm sure most of you are already aware, and that's the reason why we saw GBP/USD moving to the downside. But despite this, it's still showing signs of bullish momentum. Okay, and going into today's FOMC and CPI, GBP/USD is also looking relatively bullish. Okay, if we get a lower CPI reading today, one of two things is going to happen. We might either get a whipsaw, okay, where GBP/USD might do nothing and it might stay in a range of maybe between 60 to 80 pips without doing anything. However, if the reading is if we get a very low reading for CPI, then it's going to allow GBP/USD to sustain this move out of this channel here, and we should see it possibly moving to the upside. Okay, now it's very likely that CPI does nothing. We've seen this happen, guys. So the thing is, you shouldn't really give too much focus to what happens with the CPI, because the bigger event of the two is actually FOMC. So now going into FOMC, okay? These are my levels I'm watching. The first level I'm watching is how we do around here. If we get a strike from Powell that inflation is still looking sticky, we are not yet certain of when we shall cut. The rate cuts are going to come, but the timing is purely uncertain. All that is going to point to a potential move to the upside for the GBP/USD, and we are going to see it possibly moving to the upside. If it breaks this level here, GBP/USD is going to break through this level and move all the way there. Okay, now after the release of the FOMC rate decision, every single time FOMC rate decision happens, especially recently, we've been having GBP/USD moving to the upside. Okay, so at 9 p.m. I'm expecting a push up, and then possibly we range. Okay, possibly we range, and then we'll see now how that happens later. Now, if Powell mentions that that it's likely that they are going to look at cutting rates later, and again, if they maybe mention that rather if they mention that maybe, yeah, if he mentions maybe it's uncertain when they're going to cut, if it strikes a hawkish pause, then I think we are going to see GBP USD breaking through this box that it's in and possibly starting its downtrend. Remember, we're in a downtrend channel, guys. You can see this very clearly. We're in a downtrend channel from this sweep we got from FOMC. So we've been steadily declining. Okay. Now let's cross over to Euro USD. So for Euro USD, these are the levels I'm watching. I'm expecting that we are going to have a move out of this channel here from a lower CPI reading, where we shall see Euro USD buying and going possibly back to our 50% retracement. Okay. Now, if the CPI reading is not that much weak, okay, then I think Euro USD is going to continue in this downtrend. Okay, so you need to see how it fares around this level here. Okay, around this level here. If we get a break out of it and a move up, if we get a break, then it's likely that we're going to aim for that 50% retracement. Okay, now if we have a very, very weak reading, rather a very strong reading for CPI, which is very unlikely, Euro USD is going to continue its downtrend in this channel, and we shall see it selling towards this level down here. Now, crossing over to FOMC for today, FOMC is going to likely push Euro USD up at 9 p.m. and then any sustained move above this level here and even higher is majorly going to depend on what happens with is majorly going to depend on what happens with Powell today. Okay, so we just have to keep an eye on the conference especially. But the levels, guys, mark those levels. Okay, the market is going to do something at those levels. Either we get a break up or we get a breakdown here. Okay. Now, we're now crossing over to gold. Okay, gold. Guys, do not miss out on gold. We have gold today. Okay, do not miss out on gold. Now, gold. On Friday last week, you guys must be aware the reason why we saw gold selling extremely around this level here was because of that announcement from China. Okay, so one of the reasons that has been causing gold to keep in this bullish uptrend since the start of the year has been China buying a lot of gold. Right now, we got an announcement on. Actually, I was in a snapshot at the time we got an announcement, guys. I was in a snapshot and you know, gold fell about 400 pips. It fell from here all the way, I think, up to somewhere around, was it around here? Yeah, about almost 500 pips. Okay, and then when the NFP came, of course, technically gold was in a sell. Okay, so NFP didn't do much to help gold, and it has now held price action in this box here. Okay, now previously gold has been failing to break below this demand zone, as you can see, from April to May, and now even it seems like even this month of June, somehow this level here has failed gold. Okay, it has failed gold. Now gold is going to do one of two things today. Okay, if we get we are first going to get a push higher for gold. Okay, out of this box we are going to get a push higher for gold at 9 p.m. an initial move higher. Okay, possibly up to somewhere within here. I do not expect gold to move too high today after the release of that trade decision. Okay, I don't expect it to move too high. It's going to have a very, very limited move, especially since gold's technicals are looking like it's in some kind of a sell. Okay, so if Powell comes later and mentions that they are looking at keeping rates higher for longer, gold is going to take out this demand zone very, very strongly, and we might see gold going into these levels that could take it back to March. Okay, now I don't think we are going to have a move of more than 100 pips on gold. Okay, especially after the release of the rate decision. The initial is going to be just a rate, likely maybe a move of about maybe 100 pips, and then later it will now depend on what happens with the Powell. But the levels to watch are around there. So if we look for a sell, the, the best time to look for a sell is going to be if we break out of that box and move to the downside. Okay. If we have a break above, then it's likely that we break here and possibly move to the upside. But we are stuck in that range, and we just have to see what happens there. So guys, I think that's it from me regarding what you can expect today. I tend to believe that it's always good to use stop orders, especially if you're trading the news for 9 p.m. The rate release. If you're trading the rate release, use stop orders, and then after using your stop orders, then you can you can see how to go about it, and you can have a bit of a distance between your stops. So you could be looking maybe for about maybe 90 to 100 pips. Okay, 90 to 100 pips stop order. You can set maybe your stop order for a buy around this level, and possibly even a stop order for a sell around this level. So soon as you get a break, then you can have your trades closing around here, and then maybe you have your trades closing around there. That's for trading the news. Okay. Yeah, so guys, that's it from me. Question time. If you have any questions, then you kindly send in your questions, guys, so that we can handle them. Okay. Hi, Martinez. How's the morning? Martinez, you're saying, are we going to buy gold on CPI and then sell on FOMC? Please help with your predictions. Okay, guys, I'm not a wizard, so obviously I am in no position to tell you what's going to happen with gold on CPI. Okay. Now, you see, guys, this is one of those rare days when you have two big market events happening at the uh, uh, at the same time. Okay. So the thing is this now, CPI is really not going to move the market as much, especially if the data does not come into it has to be knockout data. Okay. It has to be knockout data. Like the CPI readings have to come in way higher for us to have a move to the upside. If the CPI readings come in indifferent, then I think we are going to have a choppy market. Okay. But technically, lower reading is going to allow gold to break out of this box and possibly move to the upside. Okay. If we get a relatively lower reading, but the movement is going to be very slim. Okay, we're not going to get a very big movement. The movement will be really slim. Okay, and then when FOMC comes, FOMC is what is going to wake up gold, and then we shall see gold now giving us a nice big push of possibly 100 to even as much as 200 pips. So I hope that helps, Martinez. Okay, I hope that helps. Gold is technically in a sell. Okay, technically gold is in a sell. Its momentum is pushing towards a sell. Okay, next question. Will CPI give us a double spike for today? Okay, for CPI, the spike is very likely, especially on the back if the readings are not if the readings do not surprise too much. Okay, then I think the market may not react as much. Okay, since there's FOMC today, it's very likely that traders are going to wait for FOMC. Okay, as opposed to CPI, right? Because of that too. And again, guys, like I said, whatever comes out from the CPI today is going to have very limited influence on any decisions by the FOMC. Every decision that they have already that they are going to communicate today has already been decided. It was decided yesterday. Okay. Yeah, because yesterday is when they had their last meeting as a committee. Elon Musk buying shares. Okay, Elon Musk has a share buyback on Tesla. Yes, share buybacks are bullish, Joseph. Share buybacks tend to influence the stock to the upside. Okay, so if he has announced a share buyback, I don't know how big that share buyback is. You have not told us, but the size of the share buyback depends. Okay, the size of the share buyback depends. If it's a really big share buyback, it's going to affect the stock and also possibly Nasdaq. Okay, yeah. But of the stocks that affect the Nasdaq as much is really Nvidia and Apple, because they have a big weighting on the index. Okay, so even if we have a higher Tesla, it has to really be a push of a two-digit push, possibly 15%, 20%. If it's a really small push, then I don't think it's going to push the Nasdaq. Okay, yeah. Uh, Joseph, you're saying China says we'll start buying gold again if price reaches 2,200. Okay. Yeah. Possibly, maybe China is in it for business, and of course, if you're in it for business, likely you're looking at getting in at a lower price so that you get as much reserves as possible. Yeah. So China, possibly, it could be something regarding BRICS. I really do not know. But gold might be at the start of its technical pullback. Okay, and it's going to be a gradual pullback, just like have you guys been seeing. It's not going to be a big pullback, just gradual. Okay, awesome. So I hope that helps. We didn't see which points to put stop orders. Can you please show us again? Okay, Ernest, that's not a problem. So typically for trading news, it's always wise to use stop orders. And when you're using stop orders, you look at setting them, you give a distance of about maybe 80 to 100 pips from the current market price. So for instance, like Euro USD, if you're trading FOMC, you set your buy stop about 70, 80 pips above the market price. So that in case maybe you get a sharp impulsive move to the upside, the market will break through your buy stop order and then take it all the way up. Okay. And then in case the market sells, the market will break through your sell stop order and take it all the way down. Okay. So you're catering for two kinds of movements. In case the market breaks with an impulsive move to the upside, and in case the market breaks with an impulsive move to the downside. So that is how you set the stop orders, Ernest. Okay. And then, of course, make sure you put your stop loss and take profit to cater for, that kind of reaction. Okay. Malombe, how are you doing? Good to see you. Malombe, you're saying price action of USD pointing to a lower CPI. You agree? Ah, yeah. Because of course you see the lower CPI is going to be bullish for Euro USD, right? And it seems to have tapped out at that golden ratio of 61.8%. That's where we are seeing it has tapped out. Okay. We are seeing we got a liquidity sweep around that golden ratio level, Malombe. Okay. So possibly we should, if we see a small CPI, then Euro USD is going to break out of this box and then move here. And then, of course, after FOMC comes, it might even push even higher. Okay, depending. Yeah. So technically, it's looking like a buy to me. Okay. Will Euro USD be affected by? Will Euro USD be affected much by the CPI or FOMC? Yes, guys. Anything that has the dollar will definitely respond a lot to that reading. Okay, anything that has the dollar, guys. Yeah. So yes, it's a yes. Timothy, you're saying touch on US 100. So on FX Pesa, you can trade the Nasdaq, and the Nasdaq is very nice to trade because its movements are really nice. So Nasdaq yesterday, strong move higher because Apple was up about 6%. Okay. Remember, we had the WWDC conference on Monday, and soon after that conference, within the conference, Apple announced that they're going to release Apple Intelligence, and then they're also going to get into a partnership with ChatGPT. Sorry, with OpenAI. OpenAI is the company that owns ChatGPT. So that is what saw Nasdaq pushing higher. Nasdaq is looking extremely bullish, extremely bullish. So if you're a price action trader, focus on how the stocks are going to do. If we see a weak Apple stock today, then Nasdaq is going to move back lower, and possibly we see it selling all the way back into that channel. Okay. Okay. Next question. Maintaining great, how will it impact the trend? I'm looking at a dovish pause. Most likely, we're going to get a dovish pause, Tony. If we get a dovish pause, Tony, I think then we likely see a weaker dollar, and we see strong euro, strong pound, strong gold, strong indices later in the evening today. And of course, if we get a hawkish pause where they pause and then they reduce their future interest rate projections, then I think that is going to be bullish for the DXY. Okay. Let's see. Guys, I think that's it. BTC USD, our analysis on it has not changed. BTC USD is stuck in a range for about 3 months. Okay. I've been getting a lot of questions about BTC USD, even in the physical classes and the virtual classes, simply because we are looking at BTC USD on a lower time frame. If you're looking at BTC USD on a lower time frame, it's the reason why you've been seeing it stuck in a range. It's stuck in a range. It's there. You can see it from about Feb to here. It's still stuck there. So we need a catalyst to give it that push. Okay. Possibly if we get more ETF inflows, that's going to allow BTC to move higher and things like that. But technically, BTC is in a buy, and soon enough, we are going to have that break that will take it to the upside. Okay, and guys, I think that's it. I don't know if there are any more questions. Yeah, guys, thank you so much for tuning in. Again, apologies for the late start, but I really like that you guys were able to stay and be patient all the way up to now. Thank you so much, guys. I wish you all the best. Today, do not do full margin, guys. You have to make sure that you you stay cautious. Okay, no full margin, guys. No full margin. Make sure that you at least we're able to see you in the markets tomorrow. The world is not ending today. Okay, cheers, guys. Happy trading and all the best.